everyone. Welcome back to our Technical Analysis Podcast. I'm your host, Miss Alvera, and today we're going to discuss two well-known companies in Malaysia's telecommunication sector, Maxis Berhad and Telekom Malaysia Berhad. We'll be comparing their performance against the FTSE Bursa Malaysia KLCI and the telecommunication sector. Before moving on to their technical analysis, joining me today are two amazing guests. First, we have Dr. Shak, who analyzed Maxis Berhad, and next we have Datin Nadia, who analyzed Telekom Malaysia Berhad. Welcome to both of you.
Thank you, Miss Alvera. I'm really happy to be here. Hopefully, by the end of today's discussion, I can convince everyone that Maxis isn't as bad as people might think.
We will see about that. I'm happy to be here too. I think Telecom Malaysia has pretty strong case as well.
I like this already. Looks like we're going to have a friendly debate today. Don't worry, everyone. No fighting in the studio.
No promises.
Let's keep it professional, at least until the end of the podcast.
Alright, before we compare both companies, let's start with something simple. How was the telecommunication sector overall during our analysis period? Datin Nadia?
Sure, overall the telecommunication sector wasn't having its easiest year. Throughout our analysis period, many companies faced lower revenue growth, intense market competition, and continuous investment in 5G infrastructure. Because of these challenges, the sector recorded a negative overall performance compared with the broader Malaysian market.
So basically, even strong companies had to work harder because the whole industry was under pressure.
Exactly. The environment itself was already challenging. That's why it's important to compare companies not only with the overall market but also with their own sector.
I totally agree. Sometimes people only compare a company with the stock market, but if the whole sector is struggling, performing better than your industry competitors is actually a positive sign.
That's actually a very good point. Alright, Dr. Shah, let's talk about Maxis. How did Maxis perform compared with the FTSE Bursa Malaysia KLCI?
Well, compared to the overall Malaysian stock market, Maxis actually underperformed. During the analysis period, the FTSE Bursa Malaysia KLCI gained approximately 11.42% if I'm not mistaken, while Maxis declined by around 9%. So from the beginning, we can clearly see that Maxis delivered weaker share price performance than the overall market.
That's quite a difference. What actually caused that?
According to Bursa Malaysia announcement and equity research reports, the broader market was supported by stronger performance from large cap companies, especially in the banking, utilities, and construction sectors. Meanwhile, Maxis continued operating in a highly competitive telecommunications industry. The company also faced slower service revenue growth, pricing pressure, and ongoing 5G investment requirements. Even though Maxis maintained stable earnings through cost management, this industry challenge limited its overall share price performance.
Actually, I think that's something many investors overlook. Sometimes a company isn't necessarily performing badly, it's just operating in much tougher industry.
Exactly. If someone only look at the negative 9% return, they might immediately think Maxis performed poorly. But once we compare it with the entire telecommunication sector, the story become very different.
Oh, now I'm curious. How did Maxis perform compared with the telecommunication sector?
This is actually the interesting part. Although the telecommunications sector declined by approximately 16.17%, Maxis declined by only around 9%. In other words, Maxis actually outperformed its own sector even though it underperformed the overall market.
So Maxis lost, but lost less than everyone else?
That's one way to put it. Yes, although the sector remained under pressure, Maxis demonstrates strongest resilience through disciplined cost management, continued postpaid subscriber growth, and improving operational efficiency. Those factors help the company perform better than the average telecommunications company.
I actually like the comparison because it reminds investors that context matters. Looking at one number alone never tells the whole story.
Exactly. That's why technical analysis is more than just looking whether the stock went up or down. We also need to understand why it happened.
Correct. That's also why we compare Maxis with both the FTSE, Bursa Malaysia KLCI, and the telecommunications sector. The comparison gives investors a much clearer picture before moving into the technical indicators.
Speaking of technical analysis, let's move on to the trend. Based on your chart, what trend did Maxis show?
As of 15 June 2026, Maxis remained in a primary downtrend, although the share price recovered during April and May 2026 through a secondary uptrend. It failed to break above the long-term descending trend line. This tells us that the broader bearish trend was still intact despite the short-term recovery.
So the recovery was not strong enough yet?
Exactly. Near the end of the analysis period, buyers started coming back into the market. However, the price still couldn't break above major resistance trend line. Without that breakout, we couldn't confidently say that a trend reversal had happened.
That's actually something many beginners investors misunderstand. Sometimes they see a few green candles and immediately assume the downtrend is over.
Yes, but one short-term rebound doesn't automatically change the long-term trend. We always need confirmation before making investment decisions.
Which explains why your recommendation letter wasn't immediately buy, right?
Exactly. The trend was improving, but confirmation was still missing. So investors should remain patient rather than rushing into the market.
That's a great point to end this first part. In the next part, we'll dive deeper into the technical indicators including Bollinger Bands, double EMA, MACD, RSI, and OBV to see whether they support the current trend for both Maxis Berhad and Telekom Malaysia Berhad. Stay with us and we'll be right back. Welcome back everyone. In the first part, we compared the overall performance of Maxis Berhad and Telekom Malaysia against the market and the telecommunications sector. Now, let's move on to the exciting part, the technical indicators. Let's start with Telekom Malaysia. Overall, what did the indicator tells you?
Overall, the indicators show that Telecom Malaysia was experiencing improving short-term momentum, but investors should still wait for stronger confirmation before expecting a complete trend reversal. Each indicator provided slightly different information, but together they suggest that the recovery was becoming more stable.
Let's break them down one by one, starting with the Bollinger Bands.
Sure, as for 15 June 2026, Telecom Malaysia closed at RM7.58. The share price was trading above the middle Bollinger Band but below the upper band, indicating that short-term buying momentum remained positive after the recent recovery. However, the price had not broken above the upper band, so although momentum was improving, stronger bullish confirmation was still needed before expecting a large upward momentum.
So it's improving, but still not enough to call it a strong breakout?
Exactly, that's positive momentum, but investors shouldn't assume the trend has completely changed yet.
How about the EMA?
Telecom Malaysia was trading above both EMA 20 and EMA 50, which indicate that the short-term recovery remained technically valid. However, the EMA 20 had not fully crossed above EMA 50. So, the bullish crossover had not been confirmed yet. That means investors should continue monitoring the stock rather than becoming overly optimized too early.
I noticed something interesting. Both Telecom Malaysia and Maxis had improving prices, but both still required confirmation before calling it is a complete trend reversal.
That's right. Technical analysis is all about confirmation. One or two positive signals aren't enough. We need multiple indicators moving in the same direction.
Exactly. What did the momentum indicators show?
For the MACD, both the MACD and signal line will still slightly below the zero line, although the MACD had recovered significantly. The histogram suggests the bullish momentum has started to slow down, so investors should continue watching whether both lines move above the zero line. For the RSI, the reading was around 47.71, slightly below the natural level of 50. This tells us that buying and selling pressure remain relatively balanced. The RSI wasn't overbought or oversold, meaning there's still room for the price to move either in a direction. Lastly, the OBV remained relatively stable and moved together with the share price. There was no bullish or bearish divergence, suggesting that buying and selling pressure remained balanced. A strong increase in OBV would be needed to confirm stronger institutional buying.
Very interesting. So, despite improving momentum, the recommendation was still hold and wait.
Exactly, because the technical indicator were improving, but they hadn't confirmed complete trend reversal yet.
Oh, a great explanation. Now, Dr. Shak, your turn. Let's talk about Maxis. Did the technical indicators tell a similar story?
Actually, yes, quite similar. That's because both companies operated within the same telecommunications industry during the same market environment. However, there were still some important differences.
How about we start with the Bollinger Bands again?
As of 15 June 2026, Maxis closed at 3 ringgit and 58 cents. The share price traded above the middle band but below the upper band, indicating improving short-term buying momentum. However, the price had not broke above the upper band. This suggests that the recovery remained moderate rather than decisive bullish breakout.
So, same situation as Telecommunication.
Yes, both showed improving momentum, but confirmation was still missing.
And what about EMA?
Maxis closed above both EMA 20 and EMA50. However, the EMA20 remained below the EMA50. This means buyers had regained some control in the short term, but the longer term bullish crossover had not happened yet. So again, patience was important.
I think passion is becoming everyone's favorite words today.
Exactly. Investors usually become excited after a few green candles, but technical analysis teaches us not to rush.
That's very true. Waiting for confirmation can help reduce unnecessary risk.
Oh, now let's move to MACD, RSI, and OBV.
The MACD remained above the signal line, showing improving short-term momentum. However, both lines were still below the zero line. So, although momentum had improved, the broader market remained weak. For the RSI, the reading stood at 41.01. This remained below the neutral level of 50, indicating that the buying momentum was still relatively weak despite the recent rebound. Finally, the OBV remained relatively stable throughout the analysis period. More importantly, the OBV moved in convergence with the declining share price, meaning volume confirmed the overall trend. We also found no bullish divergence, suggesting that the buying interest remained insufficient to confirm a sustained trend reversal.
I actually like the observation. Many investors only focus on price, but volume is equally important. Without volume confirmation, a recovery may not last.
Exactly. That's why the OBV become one of the most important indicators in our analysis.
I think today's discussion highlights something very important. No single indicator should be used on its own. Instead, investors should combine trend analysis, moving averages, momentum indicators, and volume before making any investment decision.
I completely agree.
Then here, looking at just one indicator can sometimes give a misleading signal. Using several indicators together provide much clearer picture of the market.
Well said by both of you. In our final part, we'll discuss the overall investment recommendations for both companies and wrap up today's podcast. Stay tuned. We have covered the company comparison, trend analysis, and technical indicators for both Telecom Malaysia and Maxis Berhad. Now, let's wrap up today's discussion by talking about the investment recommendations. Dating Nadia, let's start with Telecom Malaysia. Based on your overall analysis, what would you recommend to the investors?
To Ms. Alvera, based on our overall technical analysis as of 15 June 2026, my recommendation for existing investor is bull. Although Telecom Malaysia has shown encouraging sign of recovery, the overall technical indicators suggest that stronger bullish confirmation is still required before expecting a sustained uptrend. For potential investor, my recommendation is wait. Investors should wait for a confirmed breakout above the long-term descending trend line together with stronger confirmation from the technical indicator before opening new position.
So, in other words, even though Telecom Malaysia performed relatively well, it's still better to remain patient.
Exactly. Technical analysis is about reducing unnecessary risk. Waiting for stronger confirmation often provide investor with higher probability trading opportunity.
Oh, that explained that. Now, Dr. Shak, how about Maxis Berhad?
my recommendation is quite similar. For existing investors, I recommend hold. Although Maxis has shown some short-term recovery, the primary downtrend remains intact and several technical indicators have yet to confirm a complete trend reversal. Investors should wait until the share price breaks above the long-term resistance trend line, the EMA 20 crosses above the EMA 50, the RSI moves above 50, the MACD strengthens above the zero line, and the OBV shows stronger buying volume before considering a new position.
I noticed something interesting. Even though Telecom Malaysia and Maxis Berhad had different overall performances, both of you reached the same investment recommendation. Why is that?
That's because investment decision shouldn't be based on price performance alone. A company may perform well compared with the market, but investors still need technical confirmation before entering.
I completely agree. One of the biggest mistakes investors make is entering the market too early. Our analysis shows that both companies are showing encouraging signs, but neither has confirmed a strong bullish reversal yet. That's why hold and wait remain the most appropriate recommendations at this stage.
So, patience seems to be the key takeaway from today's discussion.
Definitely, sometimes waiting is actually part of a good investment strategy.
Exactly. Successful investing isn't about trading every day. It's about making the right decision at the right time.
I like that. I think that's a very valuable lesson for anyone who wants to start learning technical analysis.
Yeah, I actually enjoy comparing Maxis with Telecom Malaysia. It really shows that looking at a company from different perspectives can completely change the conclusion.
True. If we only compare both company with the overall market, we didn't miss the bigger picture. Comparing them with their own sector gave us much better understanding of their actual performance.
Exactly. That's why comparative analysis is such an important part of technical analysis. Well, that brings us to the end of our discussion about telecommunication sector. A huge thank you to Dr. Shak and Dati Nadia for sharing your insights today.
Thank you for having us. It was a pleasure being here.
Thank you, Miss Alvera. I really enjoyed today's discussion.
And thank you to everyone who's been watching or listening. We hope today's discussion has given you a better understanding of how technical analysis can support better investment decisions. But don't go anywhere. Coming up next, we'll shift our focus from telecommunications to the plantation sector. Our next host will continue the discussion with two more companies, SD Berhad and IOI Corporation Berhad, where they will share their comparative analysis, technical indicators, and investment recommendation. I'm Miss Alvera. Thank you once again and enjoy the next session. Thank you.
Hi, and welcome back, everyone. Earlier, we've discussed the telecommunications sector. Now, let's move on to another important sector in Bursa Malaysia, which is the plantation sector. So, can you briefly explain why the plantation sector is important in Malaysia?
Sure, the plantation sector is very important to Malaysia because Malaysia is one of the biggest palm oil producers in the world. This sector helps the country economy by creating jobs, increase exports, and generate income.
Hmm, interesting.
The sector performs depends on plumb oil price, global demand, weather, and government policies. When plumb oil price go up, plantation company usually earn more profit, so investors become more interested.
So, how did the plantation sector perform compared to the overall Malaysian market actually?
Based on our analysis, the plantation sector performed better than the FBMKLCI during the selected period. It recorded about 24.88 percentage return, while the FBMKLCI only recorded about 4.75 percentage. This shows that plantation stock give higher return than the overall market.
Oh, that's a huge difference. Now, I think we should move on to the first company, which is the SD Guthrie Berhad. What did your analysis find actually?
SD Quadri perhaps was one of the best performing companies in our analysis. It performed better than the FBMKLCI and also did better than many other plantation companies. The price showed an upward trend, which means buyers were still in control. The Bollinger Band showed the price stayed near the upper band and the double EMA was still bullish because the short-term EMA stayed above the long-term EMA. The MACD showed positive momentum and the RSI stayed above 50 and the OBV continued in increase. This means buying activity was still strong.
Oh, I see.
So our recommendation is hold for current investor and buy for new investor if the upward trend continues.
Great. So, between SD Guthrie and IOI Corporation, which company has the stronger outlook actually?
Certainly, IOI Corporation Berhad also performed well during our analysis period and outperformed the FPM KLCI benchmark. However, compared to SDG3, the price movement was slightly less consistent, indicating the more moderate upward trend. From the 10 analysis, IOI Corporation remained in an overall uptrend. Although the share price experienced several pullbacks, it continued to recover and maintain positive momentum. However, the stock has yet to confirm a strong backup above the descending trend line, so investors should remain cautious. Looking at the technical indicator, the Bollinger Band showed that the price was trending around the middle to upper band, suggesting the buying interest remained positive. The double EMA also remained bullish as the short-term EMA stayed above the long-term EMA. For oscillator, the MACD stayed above the signal line, indicating bullish momentum. The RSI remained above the natural level of 50, showing the stronger buying pressure than selling pressure. Meanwhile, the OBV continued to move upward, indicating that the trendline volume was support overall price trend. Based on this technical indicator, our recommendation is hold for existing investor because the overall trend remains positive. For new investor, we recommend waiting for a moment for a confirmed breakup above the resistance level before consider a buying position.
Oh, okay. Now we'll see. So, can I ask what can investors conclude from the plantation sector analysis actually?
Overall, Sticker 3 demonstrates a stronger technical outlook. It shows a clearer uptrend, stronger momentum, and more consistent buying pressure throughout the analysis period. Although IOI Corporation also outperformed the FPM KLCI and maintained a positive trend, its momentum was comparatively weaker. Therefore, investors should wait for the stronger confirmation before making a new entry.
Oh, I see how it goes.
Overall, the plantation sector performed better than telecommunication sector and also outperformed the FPM KLCI during the selected period. Among the companies we analyzed, SD-3 Berhad show the strongest investment potential because it maintained a healthy uptrend supported by strong technical indicator. II Corporation also presented positive prospect, but investors should wait for additional confirmation before entering the market. Finally, investors should always combine multiple technical indicators such as Bollinger Band, double EMA, MACD, RSI, and OBV instead of relying on a single indicator when making investment decisions. And that's all.
Okay, now we've already heard about telecommunication sector and the plantation sector. Thank you to both of our guests for their insightful explanation. Until next time for the Bursa Malaysia market. Thank you.